Welcome everybody. Welcome to the Cryptoverse DAO. Welcome to the news, the crypto news with the Cryptoverse DAO. If you're catching this on YouTube, like, comment, subscribe, all of that good YouTube stuff that YouTube people tell you to do. If you want to join us live as well, because we do roll into live discussions after each of these segments, and it's just great. It's a nice community, interesting conversations, and we want to hear your take on things as well. Because at the end of the day, everyone that's involved in the crypto sphere or the cryptoverse, right, is pretty instrumental in moving and shaping the future of this space, moving it forward and deciding what the future of this space looks like. So if you want to be more actively involved than you potentially are now, join up and become a part of it. So with that out of the way, this is something that I wanted to cover on the previous episode. Biden was supposed to, this is from the 25th. Biden was supposed to hold a meeting on the semiconductor bill. This is an interesting piece of news if you follow Nvidia and all of that stuff. The big tech reporting was out. The numbers for Google, the numbers for Microsoft. It's all publicly available now. I think if you go on Twitter and just type in $Google or $MSFT, whatever it is, whatever the ticker is, you'll be able to take a look at the actual numbers. And yeah, on the Pelosi stuff as well, I think I mentioned this a second ago on the Discord, but they reported a short on like not a short, like selling stocks in Nvidia at a loss of about $300,000. So that's happening, right? He was supposed to meet virtually with labor leaders and CEOs. There's a push for legislation basically to boost the semiconductor industry, the production of semiconductors, the basis of technology basically, in America, to move this back into the States, away from, most of it's in China. And there was a really interesting tweet, I think it was by Palmer Luckey, the guy who, the gentleman behind Oculus, who's now doing Anduril, all of that defense drone stuff, really interesting stuff that this dude is doing now. He tweeted about how, it was quite insightful, about how Apple is one of the biggest companies in the world, and literally with a single stroke of a pen, single piece of legislation, that company could topple. It could be crippled if these ties with China, between the US and China, they are worsening. They really are. If things get really bad, single stroke of a pen, a single piece of policy, and boom, it's gone, it's done. So to prevent that, to mitigate that, I think it is quite a smart move overall. But what do you think? Let us know in the comments below. Let us know in the live portion of it as well. Moving on from that, let's talk about a lack of crypto experts. This is a major concern for the EBA, the European Banking Authority. They're worried about their ability to accommodate new crypto regulation, which is all due to come into force in 2025 because of a lack of talent and logistical issues. So one of the challenges, this is the chair, Jose Manuel Campa, he said in an interview with the Financial Times that it'll only be until roughly 2025 when the agency will know exactly which cryptocurrencies it'll be charged with supervising. Based in Paris, founded in 2011, EBA. Yeah, these guys are responsible for overseeing banking regulation across the EU. We've seen MICA, yeah, there it is as well, markets and crypto assets, legislative package this year. It was finalized this year, puts a strong focus on stablecoins, seeks to achieve legal certainty for the crypto industry as much as possible, while also ensuring financial stability across all 27 member nations. Really interesting moves in the EU and in the UK as well. There's a election, a prime ministerial, I don't know what the word is for a prime minister election, but in the UK there's a battle happening within the Conservative Party, and one of the guys, the previous chancellor, Rishi Sunak, he's been kind of bullish on crypto to a degree. We would talk. I think one of the first news episodes we ever did for the YouTube talked about Rishi Sunak and his potential stablecoin. Literally, we talked about CBDCs and staples. And again, with CBDCs, there's that security versus privacy versus security debate, as has been raging on for years and years and years with any emergent technology and how much control the government has over it. End of the day, you see things like Terra Luna, you see things like all of this contagion in the markets as a result of these exchanges basically showing the world their insolvency and causing these ripple effects throughout the market. All of this stuff, it's burned regular people, and because there's so much sentiment around like, hey, I can get involved, I can do this, I can enter the markets, I can be involved in finance. Regular people, more and more of them, are leaving their jobs, getting into intraday trading, getting into crypto trading, getting into just this industry in general. And a lot of them get burned because it is kind of like the wild, wild west right now. It really is. The technology is amazing. It's fucking fantastic, and it can only do good for the world. But people can do a lot of bad for the world. People can be stupid, and people can be very greedy. And people can be stupid and greedy at the same time, which can cause a lot of damage to other people. And if, it's an emergent technology with a lot of attractiveness, a lot of pull, if there isn't a buffer to make sure that people are fully informed before they enter the markets. This is why the Cryptoverse DAO exists. Literally, this is what we're trying to do for people, to create a sense of educatedness, so that you can, if that makes sense, like, so you can to give people context basically before they take any decision. They need to know, like, if you're trying to invest in an NFT project, most people don't know that a lot of NFT projects are fucking scams. A lot of people don't know that you can view, like, the GitHub to see if it's something shady. A lot of people don't know the value of having a doxed team. Like, these things, the information is just slowly, the information is getting out there and it's becoming more and more accessible. But regulation, similar thing, at least until you need a little bit of flex tape, to seal up the crack before you can build the bucket, fortify the bucket so it can hold the water better, as a very basic analogy. So, but sorry, that's tangential. To get back to this, the EU banking regulator cites hiring. Okay, another major concern that Kampa said. Now let's get back to here. So they want to ensure financial stability and also have legal certainty for the crypto industry, which would be good. But he acknowledged that the very dynamic nature of the crypto industry, that's putting it lightly, means that regulation naturally tends to go behind the curve. That's true. Adding that in 3 years' time, cryptocurrencies may have transformed into other uses that Kampa cannot anticipate, which is very true. I mean, we see the Ethereum merge just around the corner, and the price of Ethereum is going up as well. The merge, Vitalik's talking about a surge and a verge and a purge and a splurge that's happening simultaneously across the board alongside the merge. What the merge is basically going to do is lower another barrier to entry to Ethereum, basically this platform to build decentralized applications and basically implement or add blockchain as a modifier to pretty much any idea, which is fucking fantastic. That is what's gonna transform the future. That is gonna happen. And so yeah, it's tough. It is probably gonna be behind the curve, but at the end of the day, this is what we've got. This is the best system we've got, and we'll just have to wait and see what this looks like. But do exercise your voting power. That is very important. Farcical though democracy might be, it's important to exercise whatever semblance of power we feel like we have. Another major concern, according to Kampa, is hiring and retaining the specialized personnel that the agency requires to supervise the $1 trillion market cap, crypto industry. High demand across society, 110%. One possible way to onboard experts with skills in the crypto sector would naturally be to offer generous salaries. That's something that the EBA chair, Kampa, said is not within the range of possible discussions between the agency and the EU Commission, the European Commission, sorry. Although Kampa didn't rule out that the EBA may get it wrong, or be, as he said, behind the curve, with consideration of how fast the crypto sector is evolving, he still insists that reputational risk is not something he'd be concerned about. His concern is making sure the risk they've identified is properly managed. Nice. If they don't do as well as they should have, they're going to have to live with the consequences. Well, end of the day, regular people are going to have to live with the consequences of everyone's decisions. which is why it's very important to empower your own decisions. If you're a regular person, regular old Joe, you got to empower your decisions as much as you can. And education is how you do that. Crypto traders split on the upcoming Fed rate hikes impact on Bitcoin. I guess we kind of saw this was from 10 a.m. It's now 9 p.m. In the UK. And we saw a pump up to, I think it was 22,000. Straight up pump. I'm not a technicals guy, so I'm not gonna butcher the explanation of what happened. I'm just gonna break down the article. Do check out today's technicals episode from Simon. Absolutely brilliant breakdown of pretty much everything. Plus some outlooks to, yeah, just check it out. I'm not going to spoil anything. Go check it out on YouTube and join the Discord with the links down below so you can be part of these things live. So the U.S. Central Bank has raised rates by 150 basis points since March, which has injected volatility into asset markets. Some analysts expect BTC to stay resilient after Wednesday's expected hike. So the Fed likely going to raise the benchmark borrowing cost by 75 basis points. Yep, that is exactly what happened in a continued effort to drain liquidity to tamp down inflation. Crypto traders are split on how BTC is going to react. Griffin Ardern, a volatility trader at crypto asset firm Blofin, foresees a Bitcoin price drop after the Fed lifts its rates by 75 basis points. Considering that the overall risk level of the crypto market has not returned to a reasonable level, it is very likely that the price will drop by more than 10% after the Fed hike. The Fed's liquidity sucking measures, such as rate hikes, I was going to say hate hikes, bruh. Rate hikes and balance sheet runoffs have roiled asset markets in the past few months. BTC's declined by 50%, over 50% actually, since the central bank kicked off the tightening circle in March. BTC and the broader crypto market may see another relief rally following the 75 basis point hike. That could be what we're seeing now, after which we expect markets to trade sideways, while Ethereum may outperform in anticipation of the merge. Yeah, that's a pretty, yeah, makes sense. This is according to Dick Lowe, the founder and CEO of quant-driven trading firm TDX Strategy. Perhaps traditional and crypto markets have priced in the impending 75 basis points hike, which Fed officials hinting at such a move in recent weeks. 7% drop in the week leading up to Wednesday, which is today. We're seeing participants take a risk-off approach ahead of the FOMC decision, as expected. This is what Lowe responded when asked about the pre-Fed flows. At press time, the Fed Fund futures, derivatives based on the benchmark interest rate, put the likelihood of a 75 basis points move at 75%, alongside a 25% probability of a 100 basis points hike. Alex Kruger, trader and analyst, he said that the crypto market could see a small rally following a 75 basis points rate rise, but warned of a decline should the central bank surprise with a 100 basis points move. But Fed officials had pushed back against a full percentage point hike earlier this month, which explains what actually happened today. Beyond rate hikes, so the focus will be on how worried policymakers are about unemployment risks and the looming recession in Europe, well, across the world, to be fair. The market has convinced itself that inflation has peaked, and the Fed will go for slower rate hikes after July, eventually cutting rate next year. I think, what did Jerome Powell say? I think he said it was like 2% that they were gonna see inflation drop to, like 2%. Also, look at all the green over here, man. That's nice to finally see. Just straight green across the board. After a while. It's been a while. That seems to be evident from the 28 basis points drop in the 10-year Treasury yield in the past 7 days. At press time, yield stood at 2.8%. Risk assets like Bitcoin could rally if Jerome Powell sounds increasingly concerned about recession risks, which he really didn't too much. Well, at least with inflation, he didn't sound too concerned. Bolstering market expectations for a policy pivot, going from tightening of policy to easing of policy in 2023. Observers expect the Fed to retain its single-minded focus on controlling inflation while downplaying recession fears. I mean, yeah, moving fucking goalposts. What did they do? Didn't they literally gaslight the world into like, oh my god, you sound so crazy. What are you talking about? That's not a recession. What, two annual negative GDP? Yeah, nah, what are you talking about? You're crazy. You sound insane. Like, straight up, this is pure gaslighting. There's no doubt that Powell will pivot, but the pivot will not be this year. At least until November, okay, and there will be no significant reduction in rate hikes. The reason is that the Biden administration needs the Fed to join them in expressing its determination and confidence to fight inflation to win the midterms. This is what Blofin's Ardern told CoinDesk. According to John Turek, the author of Cheap Convexity, the Fed is likely to stick to the June script. We are, he says, in this time inconsistency state, where the Fed is reacting to June, and the market is trading the European recession. The Fed will side with June CPI, the consumer price index in June, and I think to more of a degree than risk assets are suggesting right now. Interesting. Okay. This was said in a Fed preview that was published on Tuesday. So that's a little bit of sauce there. The next thing we're going to look at is stablecoins. Will stablecoins be tethered to the Fed? Lawmakers have circled that option. Let's take a look. So the U.S. Central Bank may get a leading role in policing stablecoins, according to legislation being negotiated in the House of Representatives. Crypto analysts are weighing in on what that could mean. So companies issuing stablecoins would have to deal with the Federal Reserve as the chief oversight agency. This is according to the current version of a bill being developed in the U.S. House of Representatives. Say, good old people familiar. I love it when people familiar are the source. Amazing. While the industry is desperate for rules and supervision, stablecoin firms would be policed by an agency that devotes much of its time trying to keep Wall Street banks on a short leash. This change would be novel for the Fed and the non-bank crypto businesses, DAOs, whatever, that have never had a federal supervisor. Lawmakers in the House Financial Services Committee have found common ground on a bipartisan effort to establish stablecoin oversight in the United States. Now, this could mark a first step towards crypto regulation, but a few points remain to be hashed out as it stands. Naming the Fed as the government's watchdog for stablecoin issuers is in the bill. Again, this is two people who are, quote-unquote, close to the issue or familiar with the talks. They've asked not to be named until after... well, no, not until after. They've just asked not to be named because the legislation has not yet been released. Details still fluid, so this could all just be a hot, stinking pile of bullshit. The Fed is still the big fish in the pond of bank regulators. Stablecoins are still a big deal. It's not surprising. This is what Ian Katz says. He's the managing director at Capital Alpha Partners, a DC-based research firm. There was always, he says, going to be a big role for the Fed in stablecoin oversight because of stablecoins' potential ramifications for the dollar. Committee leaders initially thought they'd be set to put out the bill this week, but a last-minute intervention from, good old Janet Yellen, wow, may have delayed it until after the August congressional recess. This is, again, another person familiar with the matter has said this. The Treasury Department's insisting that the bill addresses risks to customers' money when crypto exchanges don't take steps to wall off that money from the firm's own assets. Very important distinction to be. Yeah, for sure. Meanwhile, Republicans objected to expanding the legislation. Lawmakers and their staffs will have the rest of the summer to work on the language, although the Fed's role is not as controversial as other elements of the bill. Okay, stablecoins like USDT and Circle Internet Financial's USDC, which are both tied to the value of the dollar, they're both pegged to the US dollar. They represent a relatively small share of the 1 trillion market cap of just crypto overall, but they're traded at very high volumes because they're often used by investors to move in and out of Bitcoin and alts and Ether and other alts. If the House bill opens such non-bank issuers to the Fed, to Fed master accounts, it makes sense that the Fed would play the role of the primary federal supervisor. Yeah, this is according to Alexandra Steinberg Barrage. That's a cool name. A former senior official at the Federal Deposit Insurance Corp, who is now a regulatory lawyer at Davis Wright Tremaine. If the Fed is in charge of licensing non-bank stablecoin issuers, it puts the payment, the licensing, the supervisory functions, all in the hands of a single regulator, a single regulatory body. What do you guys think about this? Is this good? Is this bad? What's the outlook? Are you feeling bullish? Are you feeling bearish? Do you trust the Fed to do this? Let us know in the comments below. Join the live discussions and let us know live. All of this is going to be in the stream resources as well. So, if you'd like to read through the entirety of this, go for it. Do it. And now let's talk about something a little bit more bullish. Let's talk about NFT potential. It's vast. Creative possibility is endless. And the merge is absolutely reaffirming this. I mean, let's break down the article. So Josh Katz has said that ticketing is one of the most compelling use cases for NFTs, as it can prevent fraud. While some refuse to adopt non-fungible tokens, others are finding ways to realize the potential of NFT technology to solve real-world problems. We saw the U.S. Air Force using this to mitigate overspending issues. We're seeing there's literally projects that are applying the tenets of cryptography to chemical like chemistry, like organic chemistry. It's fucking crazy. The amount of things that can be, like, the amount of potential that the use of decentralization or decentralized, the principles of decentralizing, when they're applied to something, the possibilities are absolutely endless. I think the negativity has really come from the fact that a small cohort of bros have created a friggin' profile picture mafia, which is fucking stupid as shit. It's so stupid, and it's a bubble. It's a bubble, in my opinion, and it's going to, bear markets, man. Bear markets, they crush the entirety of the market. The diamonds that can handle the pressure remain, and the rest kind of fall apart. And it's all a self-equating system. Everything is a system that seeks to find equilibrium. It's all kind of survival of the fittest for the environment, which is also consistently changing in accordance with whatever it is that human beings think is the right thing to do, or the good thing to do, or the most profitable thing to do. It's consistently shifting goalposts. Good God, goalposts. But what we do know is that with the merge, we're going to see lowered barriers to entry, which means more and more people with better ideas than a profile picture being traded around are going to be more empowered to make those ideas a reality, which is going to be, we're going to see much more interesting use cases for NFT technology. Right off the top of my head, I mention these projects all the time, but Copernic Space, really interesting project. They're going to be at NFT Expoverse in LA. The upcoming thing in downtown LA, they're going to be there. What they're doing is space assets. It's so cool. Literally, the democratization of space. And how are they doing it? It's through NFT technology. Think about something like Satoshi Island. This is literally blurring the lines between NFT technology and, like, the real world, like technology and the real world. This is land, actual land ownership deeds. With a marketplace and all of this stuff. It's amazing, right? These are projects that are pushing the bounds of what NFT technology can mean and what it can do. Profile pictures, not so much. Now, with that said, with that little bit of context, let's break down the actual article. So Joseph Katz, CEO of NFT marketplace Yellowheart, spoke to Cointelegraph recently. Talked about the future. He talked about ticketing, by providing immutable proof of authenticity. For every ticket issued, venues and artists have an effective defense against ticket counterfeiting. True, 110%. Fantastic. One of the most compelling use cases for NFTs. He cited the UEFA Champions League incident in Paris. Fraudulent tickets caused chaos, apparently. Probably, it's football, so there's probably a lot more chaos than just tickets. When asked about his thoughts on what the NFT industry will look like in the years to come, Katz said that NFTs will be involved in many day-to-day activities in various industries. True. He said this will happen when people realize that NFTs can increase engagement and, key fucking word, cut out intermediaries. The growth potential is endless. I agree. The growth potential for uptake, the growth potential for implementation, and the creative possibilities absolutely endless. It's basically like a new language. It's a new color that you can use to do fucking anything. Katz also shared his thoughts on whether NFTs could become bigger than crypto, like Bitcoin. I mean, maybe. Yeah, potentially. I mean, if you really think about it, Bitcoin is literally just, it's a transactional token, right? It's just one utility. It's just literally the one utility, which is good. Like I said, it's a very good thing. But also it's singular utility, which can be a little bit limiting. NFT technology, I mean, we'll just have to wait and see. I'm not some freaking crypto pundit that's gonna make a long-term prediction, but I do believe that lowered barriers to entry are absolutely a positive factor, a progressor, not a detractor. They are a progressor to mass adoption. They are a progressor to exponential growth. So yeah, take that as you will. He explained that there is room for both, as the two blockchain-based technologies have their own unique utilities and use cases. Crypto is transforming how we make payments. NFTs are employed to grant digital ownership and authenticity in inventive new ways. It's not just, yeah, it's transforming how we make payments. It's transforming what financial freedom means to human beings. Think about like an asylum seeker whose currency means fucking nothing. This popped into my head when I was thinking about, I'm a huge Marvel fan. I'm like a big nerd. And there are these shorts that happened when they were promoting Thor Ragnarok. I think in one of the Thor movies, there was Thor and this intern type guy. And he was talking about like these coins, and he's like, oh, on Asgard, these coins are worth a billion bajillion of your human coins. And like it doesn't matter, like someone who comes through from like a war-torn nation or something, like they leave everything behind. You can convert your stuff into Bitcoin and carry that with you, and so you're not starting from absolute zero, you know. And things like authoritarian regimes. I mean, I shouldn't get too political, but yeah, forget about that. Forget about authoritarian regimes. Let's talk about like a country with a ton of corruption where a central bank is just not a viable option because it's just so fucked. Like the financial situation is so fucked. This is financial freedom for you. You know, it's trustless. There's no oversight. And again, you know, no oversight, that means danger. But it's danger if you're not educated. It sounds harsh, but it's danger if you're making somewhat stupid decisions, man. Like you shouldn't be risking more than you can afford to risk. You shouldn't be you should be diversifying your portfolio with investments like this and stuff like that. But yeah, besides the point. A study has revealed that one of the hurdles that the NFT market must surpass is consumer trust. A survey conducted by the National Research Group, this showed that 15% of respondents have complete trust in NFT marketplaces. Well, I mean, those 15% are stupid. Even I don't have complete trust in NFT marketplaces, bro. You shouldn't have complete trust in anything. At the end of the day, when it comes to crypto, the golden rule is if it's not your keys, it's not your fucking coins. And that is absolutely true. No matter where you have your money right now, I know everyone's fucking salivating at the idea of Bitcoin suddenly jumping up to fucking 60 or 80,000 or something. I know everyone has these wet dreams in the back of their heads. You should know all of these exchanges, they would be able to, if all it takes is a piece of legislation or something. It just takes something, man. You see what happened with Solana. Like, it's just ridiculous. It's ridiculous. Not your keys, not your coins. End of. That should be the guiding light, the guiding principle. And despite this, research showed that there's an openness among fans to learn about this technology, and that is good. That is what you should be doing. I would say, like, spend the first, because the boom and the bust cycle, like the pump and dump cycle, the up and down, it's a circular, cyclical thing that continues to happen. People lost their shit at the top and lost their shit even more at the bottom twice now. We've seen this cycle happen. It's going to continue to happen. So even the point of what I'm saying is, if you feel like if you miss the wave, if you miss the pump, don't fret. Don't fret, because after the pump comes a shit ton of opportunity. The bull market is going to see all kinds of projects that you can invest in. All of these projects are going to be able to get off the ground because they'll have funding. Investors will be looser with their change. So you'll have more opportunity to make money. And at the next bear market, you can build like we're trying to do at the Cryptoverse DAO. This is what we're doing. Billionaires are built or made in the bear market. So the cycle is going to repeat. What I'm saying is spend time learning. If you're new to crypto, spend a good 6 months or a year just learning literally everything that you can. I am very fresh into this space and I learn. I'm sure people who have been here since like 2013, 2012 or whatever will also tell you that every single day that passes, they learn something new. So don't ever fall into hubris because that is the ultimate kind of, ego is the ultimate killer of potential and opportunity. Don't fall into hubris. Continue learning, continue educating yourself, and get involved in a cool crypto community. With that said, I know of a really cool crypto community. They're called the Cryptoverse DAO. Go downstairs, not downstairs, what am I saying? Scroll down a little bit and hit the link tree and join us. With that said, that brings us to the end of the news episode for the Cryptoverse DAO today. I hope you've had a really, really great day, and I hope you've had a good time watching this. I hope to see you in the Discord down the line. I've been your host, Dharma. This has been the Cryptoverse DAO. Thank you so much for being a part of it. Bye-bye.